Hello traders, Gary Wagner here. Just about 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 13th day of January 2015, and this is the daily report for gold and silver. Interesting day developing in the marketplace. We did have gold trading substantially higher overseas last night. Looks like a little bit of profit taking has ensued. Market currently trading roughly $12.30 and change, putting it down between $2 and $3 on the day. Now it has had a high of $12.43.50, the low right in this area at about $12.28.10. We are going to be moving our stops up. We'll talk about the area that I am going to recommend and the rationale behind it, all on today's daily report. Silver, interesting in that silver is currently trading up roughly a 2.5% on the day, over $17 per ounce, but just by a little bit. As I said, up roughly 40 cents on the day. The low $16.73, the high $17.21. We'll talk about moving our stops up in silver also towards the end of today's show. So traders, a fairly interesting scenario which is developing on a technical basis in gold. We're looking at a 230-minute chart. And on this 230-minute chart, I've basically put one fib retracement starting from the former high, 1255 right here, down to this most recent low at approximately 1130. When we do that, we get our different fib levels. The low today roughly at 25 and a 23% retracement roughly at 25. That's right here. You can see where we found some support here. You can't really call this resistance, a little bit above it, and also right here, resistance a little bit above it. So my suggestion is we currently have just a protective stop that we put in at 1200. What we want to do at this point is to raise this stop up so that it is now below this 1225, so 1223, 1224 in that area. You're going to want to trail your stop up right here to protect it. Now we're in what, roughly at 17. So even if we put it at 24, we get out with some profits. My recommendation for raising the stop is, now that we've definitively found some resistance, and of course this market could turn around and move back up, but once we found this resistance, the key is that we do now have a higher high than the previous high. We've also got these series of higher lows that are coming in right in here and here, and that bodes well for any kind of bullish sentiment in the market. However, we could see the market easily retrace back to 1207, which is a 38% retracement level. In other words, come down, test this area, and then move back up. And that, of course, would erode any kind of profits that we have in there. So, as I said, my suggestion is to raise your stop to just below 1225. So traders, as we begin to look at some of the other markets that, of course, influence the price of gold, I first draw our attention to our dollar chart. This, of course, is a weekly dollar. It is well above this top right now, trading roughly at 92.45. You can see that right in here. It's back and strong. Where the market's going to go, we'll make a basic forecast once we determine if this price point, meaning 92 on the dollar index, can actually become support. If that's the case, we'll plot out our next level to the upside. If it becomes resistance, we already have plotted these two different areas of support that it would go to. So as far as the Standard & Poor's goes, you can see this being a weekly chart. We are down on the week, currently trading at 2019. No question of a doubt, no matter how quickly the market recoups or not recoups, we did find resistance at this 150% extension level that we created by looking at this as a wave 1, wave 2, and this being a wave 3. Whether or not we'll see a retracement and then have this market come up, or we'll see an actual correction, is still kind of in the cards, so to speak. There's not enough information, but we did try to stage somewhat of a rally today in the S&P. Of course, that was to be short-lived. Then when we take a look at oil, we can see now this is a monthly chart, and realize we'll go to a weekly, but today on a daily basis, I believe it was up just a little bit. On a weekly, we are still down. Monthly, we're still down on the month. On a daily, though, you can see this small little clip up. It's a very, very small candle, but green nonetheless. It is off of the bottom, but that doesn't really give me the indication that we've seen the last of this market trailing lower. But as I said, you can see how it is trading off of the lows. You know, traders, we have seen so much downside pressure in the precious metals market, specifically gold and silver, that it's been difficult, if anything, to really get bullish in the market. But I do want to spend a couple of moments, kind of the last topic of today's show, talking about a couple of things that we talked about months ago, but kind of bring them back into the limelight, because there might be some real possibility that that is what we're seeing unfolding. The first thing I want to mention is that when we went and looked at really historical avenues, buying right at the beginning of the year, and of course as the market was going up, we saw that we had a prevalence of these bottoms coming in really in January. And so there's that January effect that we're looking at. We got that at the beginning of November, but we're certainly getting a continuation of that. The second thing, though, is that we talked about the possibility that the way this wave count was unfolding was simply put a bear market truncation. And a bear market truncation, in essence, what you're getting is you've got your wave 1, wave 2, we've got our long wave 3. Wave 4, we've kind of put it as this compression triangle, but if wave 4 simply topped out right here, as we said, we get this truncated fifth wave, and then we get a move up from there. That's simply called a bear market truncation. It's been documented not only by R.N. Elliott, but by Prechter and many other Elliott wave technicians in terms of the pattern itself. Not that what we're looking at right now is this pattern, but the pattern itself. And so I do want to at least consider that possibility and keep our eyes open for that in the days and weeks ahead. So traders, as you recall, when we were looking at silver the other day, I was talking about really the most logical first place we would look for some resistance to come in was roughly from 17 to about 17.20, 25. I believe those were our numbers. And a lot of it was based, at least on a technical study, on these tops that we had here. Of course, we're looking at our daily chart. Well, we got that high today. The interesting thing, or the dilemma, I should say, in terms of moving our stop up in silver is because we've had this sizable move, you really want to keep this stop just under 1650 or the low of this candle. So again, we're going to be moving our stop up in gold to just below 1225, and then 1650, we're going to move up our stop just below 1650 in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.